Wednesday, November 19th, 15th, sorry, November, getting ahead of myself. Wednesday, November 15th, market analysis. Stan Ehrlich. I start out with the stock market indexes, and we start out today with the December futures contract E-mini. You know that we've been up for every single day this month except for two. Yesterday was a very small down day, and a couple of days earlier on November 9th, it was a pretty good down day in a bearish engulfing, which did not have any downside follow through. This is a very significant long run of higher and higher and higher closes. There were 8 days in a row, which is rare, before the first day down on the 9th. And now we've had Friday, Monday, Tuesday, and so far today higher again. But I see plenty of signs that this market, and I keep saying this, is about ready to go back down. Now, the resistance area is tested. We're overbought. The market is starting to slip significantly. We'll see that in the 1-minute charts in a moment. I'm looking for a downside correction at a minimum to 44.34. Maybe a little bit lower than that during the next few days. Maybe it'll take a week. Next chart. But I'm bullish intermediate to long term. No ifs, ands, or buts about that. And we will start talking about in great detail, down to the minute, literally, as to when the Santa Claus rally may start. And that's a few days before Christmas, so we got some time before I need to get into the details. But we'll start very soon talking about that in detail. Next chart is the SPY, S&P 500 Spider ETF. And we gapped up this morning again and closed the gap right away this morning. But we are now starting to slip in general. I think we're going to come down at a minimum to 441 and a half. But there's a pretty good chance that the gap here would be closed at 431.34. That's frankly, my stretch downside objective for this correction. It actually looks like it's in the ballpark of 50% correction also. I don't think this is going to get closed, this big gap down here. It's a little bit too far down for me. And this one, nah. But we have 4 gaps this morning before it started to dip down a little bit. We had 5 this month. I don't remember. I've been doing this over half a century. I don't remember 5 gaps in 1 month, especially in a major market index like this S&P 500. Extremely rare. All right. Downside move starting, I think, closing the gap, 441 and a half, maybe down to, in a couple of weeks, 431, and then up. I am very bullish, intermediate long term, but we just went up too much, too fast, too quick, and deserve a downside correction. Next 1-minute chart on the S&P 500. You can see only about 10 minutes or so ago, we made a new low for the day, and we're bouncing very slightly at the moment. Next, QQQ. Also gaps. 1, 2, 3, 4. 2 days ago, I didn't change it to red yet. It's still blue. So the minimum downside I'm expecting is down to 378.70 to close this gap. But there's a good chance it'll slip off toward that previous bear trend line. And that would be around 369 or a little bit lower because it could take a few days to get there. I'm not ruling out gap closure at 363. That's probably my most downside potential. Next chart. NASDAQ. Overbought. They're all overbought. Ladies and gentlemen, I don't remember seeing a time period when the S&P was overbought at the same time the DIA, the QQQ, the Russell 2000, NASDAQ futures, of course, and the E-mini futures, of course. That's it. All of my daily charts here that I watch on a constant basis are overbought. So what can I say? I have to believe that we're very, very close to a downside correction that should offer another great buying opportunity. Let me get back to the Q chart at the moment. It's now actually lower on the day by a few ticks. So getting below Very important. Getting below yesterday's low is going to generate on any of these daily charts a red bearish engulfing ER sell signal, which we get at major and intermediate turning points frequently. But it hasn't happened yet. If we get below yesterday's low, ER1 will kick in a new short, and then we have the opportunity to have an ER3 short in the next few days. Next chart. We're lower on the day right now in the NASDAQ futures. So we'll see if we can get below yesterday's low. That'll generate the red sell signal. We are still holding in the DIA pretty strongly, but I'm still looking for the same kind of price action in a general way. Beginning of a downside dip, closing gaps. Next, the Russell 2000 had a head and shoulder bottom. Your shoulder is here. The head is right here. October 27th is the lowest low, and it is the October low also. That is just a great combination. I told you the market had an incredible 90% possible likelihood of bottoming out in October before October even began this year. It did it. I just wished it would have had at the bottom a bullish engulfing green buy signal. We came close, but didn't quite do it. And now we had this great rally with a great formation building in the Russell 2000. It's just great. My minimum upside objective is 190-ish, and that is a minimum. I am fully expecting this to break into new high ground for multiple years, sometime early next year. Next chart, we'll go to the E-mini 1 minute, and we got slightly delayed data here, so we're just starting that little rally, but we made new lows for the day a few minutes ago. Okay, now we're going to go to the October low chart to give you a perspective. The circle is at the beginning of October to the end of October. That aligns with the right and left side of the green column. I wanted to get down to 106 to 107.5. We got down to, I'm at 406, sorry, to 407.5. We got down to 409.21, super close to my downside objective price-wise, but it was a week and a half or so later than I expected. So it basically worked, and that is a low in October. Now, all these gaps have created, and we just got overbought yesterday and today, and we're showing signs of weakness. So I think the downside correction has started. Next chart. Going to, oh, I can't. Okay, we're in that. Now futures. Okay. Different perspective on the E-mini continuation contract. And we're starting to see the same kind as you would expect of downside correction. By the way, we did get a buy signal on this bottom. To the exact top day, we got a sell signal, July 27th. On the exact bottom day, on October 13th last year, we got a green buy signal. These green and red bars can be extremely profound to the exact day. And that's why I developed this ER signal automated trading system for indexes, stocks, futures, forex, crypto, you name it. International. Next chart. Got the NASDAQ. Overbought. Testing previous major highs. Too much, too quick, too fast, and lower on the day momentarily. So I'm looking for more downside correction. But it's not that serious. It's not, I think, going to last very long. And by the end of the year, we should be well into new high ground. Next chart. Bonds are dipping a little, no surprise. Slight resistance and pulling back a little. But like I've said in the stock market indexes, bonds should be very, very stable and bullish for many months to come. Now, at first, it may build more of a sideways, maybe a little bit upward slanted trading range bottom situation. And I think it's already started. And of course, we got a bullish signal at the bottom of the bond market to the exact day, October 23rd. Gotta love those. Also, at the top of this rally to the exact day, that's red, and the bottom of the break on that one, that's exactly green. Next chart, 10-year notes, head and shoulder bottom. It's a little lopsided and tilted, but that is not uncommon. Shoulder low, couple of little lows. The head of the formation took a little over a week to develop, but that's the head of the formation right here. The last shoulder low was Monday, and it shot up immediately yesterday all the way to the neckline, stopped, and today, same price, stopped, and we're having a little bit of a dip. Now, because there were two little lows involved on the left, there could be two little lows involved on the right. These patterns are very symmetrically often, so symmetry. Now, you don't have to get down to a second lowest, the same, levels. Anytime now, I could expect this thing to turn back up and break above the neckline. The minimum upside objective is going to be 112 and change. Next chart, crude oil, dipping down a little between a rock and a hard spot, resistance above, support below. But the overall trend, which is your friend, is sideways to lower. So although it may take a little time, I think there's a chance we could see new lows for a year or two, but it may take, a month or 3 or 4. Right now, I'm not going to make too many comments about crude oil. Natural gas, bullish engulfing, buy signal in front of your eyeballs right now, today, developing, not finished. All we have to do now is stay higher than yesterday's close, which looks extremely likely because we're up a substantial amount. So it's going to be more likely than not a bullish engulfing green buy signal, and that's it. Now, momentarily, we're not long at a good spot, 3.268, just a little above yesterday's high. So we have a little loss for a scalp and a position trade for ER1 at the moment. We'll see how it goes for the rest of the day. In the next few days, we want to try to get an ER3 bought at the green dot, and the number could change if the range of today changes. Sell signal almost on the high day. Great one there. Good one for a few days there. Every green and red signal that you see contains a scalp position for ER1 and a scalp and a position trade for ER3, total of 4 trades if you wish. Next chart, heating oil. Multiple shoulders, head and shoulder top. Tested the neckline a couple of days ago. Bounced a little bit. Still bouncing slightly. No change of opinion. This pattern looks good. If it breaks below the neckline, it should be off and running to the downside and get a downside objective of 2.1, 2.1324, give or take a little. In a few months, 2 months, maybe 3. Remember, bear markets fall faster than bull markets go up, a lot faster, frankly. So we need a breakout for the longer term position trades, and nothing's really wrong with this bounce. We'll watch it very carefully the next few days. Gold. We sold the high almost, got the low exactly, got the low exactly, got the high exactly. We got this low exactly, and we got that low exactly, and we got that high exactly. Come on. And I mean exactly to the day. I have to stay bearish because we have a recent sell signal. We've had a down move that's been pretty good already. We've only had a couple and a half days of rally. That could be it. I got to look for new lows. Next, silver. Same comment. Up against resistance. Higher, lower lows over time since March, April, since really April, I will say. And on precious metals, this year has been absolutely outstandingly great. Sell signal on the high there. Bottom is green, top is red, bottom is green, top is red and red. We got both highs on a double top. Impossible. We got the bottom of the break. So I'm looking for this rally to fail almost immediately, if not today, probably, and turn down to lower lows below 21.8. Next chart. Platinum. Oversold, 1 day up, now 2 days up. Coming back into resistance. All of the metals are showing 1 degree or another indications of a down move. Next chart. Copper. I got to agree, although it's not a precious metal, it still looks like resistance above the market, which is just touching today and yesterday, is going to stop it. We're there right now, so this is a very, very low risk new short price level. I'm not very convinced it's going to work, but if it does, you're right at the top of the rally, and it could. Next chart. Soybeans. Now yellow. That's caution. That's overbought on rallies. I think it's about to turn down and challenge the low, which we got with a green bullish engulfing on the bottom, red on top, not at the bottom, but the beginning of very close to the beginning of a very, very good rally. And so we got several great inner position trades. They lasted anywhere from a few weeks to maybe a month since March, April. I think now that the market's starting to slip back down, overbought conditions, that we're going to take a profit very soon. And this market looks like it's turning down. Next chart is soybean oil. And finally, yesterday, we got stopped out of our new short position that was on August 21, a huge move down. The yellow zigzag line is our trailing stop. We call it STS for smart trailing stop. It has a variety of features that move the line, not a constant amount from current quotes or lowest or highest highs, and not any other percentage amount. It depends upon a variety of features. Unique. So we're out with a great trade as of yesterday. Today, sideways, and I'm looking for lower levels overall. Soybean meal, very overbought, punched in the new high ground completely today for a long, long time. And wow, a very long time. I'm going back to 2015 on this continuation chart, 8 years. We had today a new high for 8 or more years. Wow, that's pretty profound. And guess what? Ouch, it didn't hold. Right away, after 2 days of trying to make new highs, it got up there and stopped cold turkey and turned right back down again big time. So I'm looking for a move down of major consequence. This could turn into a very broad double top, maybe. Too early to say, but that's how they start. We will get a bearish engulfing red signal if we get below yesterday's low. I'd love to see that. Next chart. Corn. It's going to go the way of wheat. I keep saying that the last couple of months, but so far I'm right. So why should I stop? We're making new lows almost, not quite. Second lowest close, so trend today. Resistance has stopped rallies. Support has not held, even though we did get a buy signal that didn't work. Not all of them work. And that's why we have a stop in instantaneously with our automated trading system, ER signals. And the losses are almost always really reasonable and small. You can contact me at info@ersignals.com. That's me at ER, that Stan Ehrlich. I'll reply to you. ER Signals, info@ersignals.com. Next, wheat. Oh boy, almost another new low, almost another new low close. I don't know how low is low, but it keeps on coming down. Next, cattle. Oversold, rally, no shocker. We've already reached my first objective, which was the beginning of this little resistance, and that was easy, and that was yesterday. But I'm thinking we could easily come back up a bit more. 181 sounds very reasonable, and even a little higher than that. I'll offer up a 184 upside objective at my most optimistic, and then down. It's a bear move. Support didn't hold. It just simply got oversold and deserved a bounce, and here we are a couple days later bouncing. Okay, next, hogs. We got almost the exact low day on a great buy signal. We rode it up, got stopped out. That's the only way we get out of trades, is getting stopped out. And sideways since. Resistance has stopped the rally. The trend is, let's look at the bigger picture. Kind of sideways to lower. Longer term, absolutely lower. So I got to think this is going to drop off to 65.5, and maybe even significantly lower than that over time. But that would be my first downside objective on Miss Piggy Live Hogs. Next. Okay, today's the first day overbought again on orange juice. And guess what? We're back to where we were when we had my huge bearish engulfing sell signal and a 1, 2, 3 big down day series of days move immediately after the sell signal. Here we are again. Same price levels, overbought again. Could we have another bearish engulfing like silver had a double top with sell signals in both eyes? Hey, what can I say? The darn thing is setting up for the same potential. This could be exciting. Let's keep a very close eye on OJ. Next, Cocoa did have a bearish engulfing yesterday. Today, it's slightly higher, but remember, we still want to get a new short ER3 signal, and now we have a price to get short at 4,038. Exactly. But that's, my calculated strategy automation number. If it gets very, very close, well, what can I say? The strategy will miss, but obviously close is not bad. What happens if we get a little higher? All I can say is it's a better and better short sale with a smaller and smaller risk. Next chart, coffee. Bullish engulfing today. Trend is, trying to turn up here and doing a pretty good job of it. We broke into new high ground a week or so ago, came down into support, and then bounced out of it again. And then Monday, we came back to support again. And now another new high. That's looking pretty good. Because of that kind of action, I'm raising my bullish expectations up to at least 180, and now probably up to about 187. Next chart, sugar to sweet. A lot of trouble at resistance and a bearish engulfing at the top there. Today is a new low since the bearish engulfing, which was not an official ER sell signal. It would have turned red. I think it's going to come down easily to the bull trend line and maybe to this support area here. I'll drag it over to the right a little bit more. Wouldn't surprise me, and that would be beginning at 25 on sugar. Next, cotton the rag, oversold, support, pretty much the exact opposite, by the way, of the sugar at resistance and a bearish engulfing. So back to cotton, rallying okay. Today, minor dip at the moment with a doji, doesn't mean too much. It's an inside trading range. I'm looking for a little bit more of a rally, but this is a definite rock and a hard spot situation. Major resistance in the high 80s, a little under 90 mostly, has stopped the rallies, and that goes back one full year. The major support area starting at where it did bottom out at around 79 down to 77, got oversold, it turned around, and now it's been 3 or 4 days up. What can I say? Ping pong ball back and forth until a breakout. Finally, back to the E-mini at the moment. You can see at the top of my screen, we're coming back up a little bit, certainly not but a point or less. 130 higher at the moment, Spider, 174 higher on the DIA, and a half a point higher at the moment on the Qs. You guys have a great day. Profitable trading to you.